You turn my, okay. Berkowitz,
Here.
Butler,
Here.
Ortiz, Oxley, Rainier,
Present.
Winfrey, Euquist.
Here.
We have a quorum.
Okay, thank you. Approval of minutes, can I get a motion?
Motion, Trinier.
Second. Roll call, please.
Berkowitz,
Yes.
Butler,
Yes.
Ortiz,
Yes.
Trainier,
Yes.
Winfrey,
Yes.
Euquist.
Yes,
Motion passes.
thank you. Okay, old business. We have on the agenda again, 25-2196, authorizing use of contingency funds for the Sheriff Adult Detention Facility, and we have some new information. Is Rashawn here?
Karen got it?
Okay, I mean, from what I understand, Karen, if you want to chime in, feel free, but from what I understand, they basically, you'll notice later on in the agenda, we're transferring money from, salaries to contractual services. That is to cover the shortfall. So they no longer have a shortfall. Apparently they were able to do that because we had funded some positions that didn't get filled, early on. So we had some money left. So, I believe we have to vote on this. And then once we vote to authorize those, oh, no, we don't. Right. Kevin, do we need to remove this? How do we remove this from the agenda? Okay. Okay, so can I get a motion to remove it? Denise Winfrey, second Trinier. Can I get a previous roll? Previous roll Butler. Can I get a second?
Second purple.
Second Berkowitz, all in favor? Aye. Opposed? Motion passes. We do have a grants report. Does anybody have any questions? Otherwise, we can just, you can read the report. And if you have any questions, reach out at a later date. Okay, thank you. New business. We have a presentation of the fiscal year 2024 financial audit results. Thanks for being here today. And let me turn on if you guys could press your buttons so I can turn on your mics. Let's see. There we
When it turns red. Jan, no, it's not.
Okay, got it.
Okay. So good afternoon. I'd like to introduce Nick Cavalieri. He's a principal with Baker Tilly, who's been our audit firm for almost 15 years.
15 years, yes.
Yes. So he's going to do kind of a recap, a review of the findings for the fiscal 2024 audit. And his presentation is up, and so you don't need to, I'll let him razzle and dazzle you with the numbers.
Well, thank you for having me here this morning to provide a high-level overview of the audit results for the November 30th, 2024 audit. So the scope of our audit is fairly robust. We render an opinion on the county's annual comprehensive financial report, which is this big booklet that includes all of the necessary information regarding the county's financial statements for fiscal year 2024. There's a consolidated year-end financial report that's required to be filed with the Grant Accountability and Transparency Unit in the state of Illinois. The county expends over $750,000 of federal awards, so you're required to present a schedule of expenditures of federal awards, commonly referred to as a CFA. As part of conducting an audit in accordance with governmental auditing standards, we'll render a report on internal control based on, matters that are necessary in accordance with those standards. And then you also have a single audit conducted over your major programs, which is a compliance audit that's conducted in accordance with uniform guidance. Next slide. So the results of our audit was that we were able to render an unmodified audit opinion on the annual comprehensive financial report. We also rendered unmodified audit opinions on the consolidated year-end financial report and a schedule of expenditures of federal awards. So clean audit opinions. We didn't have any limitations on conducting our audit procedures. All of our audit tests were consistent with rendering an unmodified audit opinion for these documents. Next slide. This is extremely hard to read, but I just felt like I'm here to talk about numbers. I have to put some numbers in front of you. I would not suggest reading this entire booklet to you because I don't think that most people would really enjoy a presentation. But I just wanted to point out that there's two schedules that really kind of focus on the high level balance sheet of the county. That's this slide, and the next slide is the income statement. And what you can see is there's certain funds that are presented as major, general fund, county motor fuel tax fund, the American Rescue Plan, and then there's a category for all other funds. So all other funds that aren't significant enough to present themselves as a separate column on the basic financial statements. And what you can see very, very easily is if you look about 3 lines off the bottom, the net change in fund balance. So this is a comparison of the revenues and the expenditures that took place during the year. All of the funds collectively as presented trended in a positive direction. So no deficit spending on the funds that are presented as major. And then collectively, all the other governmental funds also had a surplus for the year. So a healthy financial position for the county at the end of the fiscal year. Next slide. So at the end of the audit, I guess throughout the entire audit itself, we perform a series of tests, checking the balances, confirming amounts, many, many different ratio analyses that take place, things that allow us to support our opinion for rendering, an unmodified audit opinion. During the course of the audit, if we identify any errors in the financial statements, we'll report those to those charged with governance. We'll report them to management. In some cases, in these 2 cases, we propose audit adjustments. We believe that this is necessary to correct it. Management will review those and then, either accept them or not accept them. In this case, they did. And then, we bring those to your attention just so that you know that we had some issues with the audit, but they were remediated, and that's all in accordance with the governmental auditing standards. So there were 2 issues that were identified. One is categorized as material weakness because the value of the amounts were of a significant amount that we deemed them to be material. And then the other is what they call a significant deficiency, less than material, but important enough to bring it to your attention. It's also important to understand that there were not any instances of noncompliance with laws and regulations that were reported in accordance with the standards. So if we go into our next slide, this is extremely hard to read from a slide, but I'll just try to recap. There are certain funds that the county presents in the financial statements, one being the Sheriff's Chancellery Fund, and the other is the Regional Office of Education Fund. When we were performing the audit, we look at the income statement. So how much money was put into those funds and how much money was placed out of those funds. They call them additions and deductions for that particular type of funds presentation. And during that analysis, we noted that those activities were significantly higher than the prior period. We reviewed it further, did some additional procedures, worked with county personnel, and then we ultimately came to the conclusion that some interbank activity, so bank activity from one bank account to the other, was included as an addition and a deduction, which overstated the additions and overstated the deductions. So we proposed an adjustment to remove that activity so that those particular funds were stated properly in the financial statements. That was one of the findings that we had. The second finding, if you go to the next slide. This relates to bank account completeness. So the county maintains many, many, many different bank accounts. We confirm those balances, and then we perform some audit procedures at the end of the year. We do testing to make sure that transfers from one account happen into another account, that the bank reconciliations are reasonable in all material respects. And during our testing, we identified that a transfer from one bank account to another was identified on the reconciliation, but we didn't have the other bank accounts in our listing of all the accounts that the county had. This was within the county collector fund. So we ultimately brought this to the attention of everyone, found out that this other bank account existed, obtained all the different bank statements, made sure that the account activity was included within the financial statements and the ending balances. So this was something that just was an anomaly, I would say. It was actually around last year. We didn't catch it last year necessarily, but it was corrected in the current period. So our next slide. This will talk a little bit about the single audit that we performed. So the county expended about $57.7 million of federal awards. As a result of that, we audited two major programs. The first major program was the Emergency Rental Assistance Program, and then the second being the Coronavirus State and Local Fiscal Recovery Funds. So we tested about 65% of your federal awards. The types of opinions that were required to render on these programs are over compliance and then internal control over compliance. So our audit tests did not identify material non-compliance with the rules over these awards. However, there were two things that were identified that were not of a material nature, but still shown that there was, non-compliance on the use of those funds from the standpoint of the uniform guidance. And then as a result of that, there were two significant deficiencies reported over controls for compliance. So my next slides will go over those in a little bit more detail. So the criteria that's required when you're managing the coronavirus state and local recovery funds is that if you're subgranting funds to other entities, that you provide them with a subrecipient agreement. During our sampling, two of the samples that we tested, a subrecipient agreement was not in place. A beneficiary agreement was in place instead. So we identified those two as findings that the internal controls did not ensure that the subrecipient agreements were in place. And as a result of that, there wasn't a compliance matter. This did not identify question costs. Question costs are of a nature that you basically say this was a use of the funds that could not be supported in accordance with the program. This did not identify question costs, but it was a little bit of a nitpicky matter in the sense that you have to have this agreement in place. Next slide. This is another particular compliance requirement. The county subgrants out these funds to other entities. And as part of that responsibility, you have to check and see if those entities had a single audit performed, and then review that single audit report to see if there were any issues with the use of their funds, and follow up with those subgrantees to see that they remediated any identified matters. During the testing of the subrecipients, we noticed that the county was only reviewing subrecipients that had been allocated over $750,000 of CLRF funds, and not asking for everybody that received the CLRF funds if they had a single audit performed. The uniform guidance says that you need to check on everybody, irrelevant of how much money that you provided them. So this was the finding that we had for this particular matter. And then if you want to go to the next slide. That really kind of concludes the overall review of the audit process. Be more than happy to take any questions that you may have.
Julie, you have a question? Oh, you got your.
Thank you, Chair Newquist. Thank you for being here with us today. I have a question regarding the two deficiencies that you mentioned for the sub-recipient agreements.
Sure.
I don't know if you know, but I'm wondering who the two entities are for those agreements.
Sorry.
Just sit next a couple more times. You'll get it.
I don't have the names of the organizations with me, but they've already signed subrecipient agreements. It was the finding was that the beneficiary agreement is a one-time payment used like for townships. They mistakenly used the beneficiary instead of a subrecipient. So they've already signed a new one 3 months ago.
And who's, I know we have a consultant for those funds. So whose responsibility is it to provide a sub-recipient versus beneficial?
I would think we all share responsibility in it. The initial contact is probably with, Answer, Accenture. However, that should be part of our review process also. I missed it when I review because when applications or summary, payment packets are sent, that's all included. So I noticed there was an agreement. I didn't necessarily notice that it was a beneficiary instead of a subrecipient. So everyone missed it. And we went back, just to let you know, we went back through the entire population and there, I believe there was 5 or 6 of them in all 250, 60 projects. They've all been corrected.
Okay, and I'm wondering, were there any fines or costs to the county for this error
No.
at all? Okay, thank you.
Welcome.
Jackie, did you have a question?
Just curious, you said about the single audit. I thought it was a lower amount for a single audit. Maybe my memory's off, or maybe it's different for the coronavirus money versus the
Sure.
ARPA fund.
Yeah, it's a great question. So the threshold for an entity to have a single audit, the requirement for one to be triggered is that you expend over $750,000.
750.
It's actually going up to $1 million, but right now it's actually 750,000.
Okay, yeah, I don't know. For some reason in my head, I had a lower amount.
Years ago, it was like 500,000, 300,000, but it's up to 750 right now.
And I know this was all new for the county. We didn't really have
Yeah.
a grants coordinator. We didn't have anything in place when all this coronavirus stuff hit. So I think we
Yeah.
did pretty good with just a couple little things. I mean,
Well,
I'm,
And just to jump in, so we've put something new in place where we have a list of every project and Answer and Accenture will be checking with them. And then the finance staff will also be
Reviewing
reviewing
it.
the single audits and the financial statements, a learning experience for them. And it's a way to indicate, because what we want to make sure is that people that we've awarded money to aren't having some kind of issues with any grant reporting.
right.
So
And
Okay.
there is a lot to do. So thank you.
Okay, so now I'm a little confused. I have to ask a follow-up question. So if the threshold is 750,000, but weren't you saying that we need to monitor the subrecipients to make sure that that they are complying with audit requirements, even if it's under
But
750?
it's not 750,000 from us. It's 750,000 in federal dollars for the whole organization.
Oh,
So
got it.
if a township gets $50,000 from us and 700 from other grant sources, they would still be required.
Got it.
That was the misconception. I guess it's not just what we give them from ARPA. It's
Okay.
all of their federal dollars would make them required to have the single audit done.
Okay,
It has
thank
to be
you. I
federal.
didn't quite understand that. So
Yeah.
anybody else have questions? Destiny, let me, oh, you want to just use that?
I do have a couple questions. Thank you so much. So I know you mentioned that you now are documenting this. That was going to be my question. I just want clarification. We have a public inventory of all the county bank accounts so that we don't go through what we just went through with the underreporting or the overreporting of the funds.
So the bank account that wasn't listed, we worked out with the treasurer's office.
Wait, hold on, Rashawn.
I'll do this.
I mean, Karen, I need to, thank you.
Sit next.
So what
Okay.
we've worked out is that the treasurer's office will now provide us a listing and we can trace it to back to all the accounts. And they will tie it to their trial balance for the system they use. So we have a method to prevent that from happening.
Okay, sounds good. And so as far as the federal funds tracker goes, we're going to be updating that regularly. Is that available for everyone to see, or is that just for internal?
I would think it would be more for internal use.
Okay.
It's a list of all the projects, when their fiscal cycle ends,
Okay,
whether they need to have a single audit, whether we found and reviewed the single audit, whether we have their financial statements. I'm not sure that we would share that if we need to. I guess we need to figure out if that's something that we should be sharing. But what we're going to be doing is reviewing the single audits if they're required to have one to make sure that their audit firms don't have any issue with how they're managing their grants.
Okay, I
That's
was,
the whole purpose of it.
yeah, that's what I was gonna ask. So we are tracking now, they have their agreements, signed agreements, and that they are in compliance with their audit requirements?
Well, that's what we're gonna be
Right.
tracking going forward. We were tracking the higher dollars, now we're tracking everyone.
Okay, thank you.
And I would just suggest that if there is a county board member that needs to see that information, let me know and I can coordinate with
I
finance.
just don't know
on
what's
that.
on the form.
Right,
It has tax
exactly.
ID information, it has to be
I
redacted.
can't
so-
imagine we'd want to make that public,
Right,
you
right.
know, so I could be wrong,
No,
but
I agree.
Kelly, hold on 1 minute. Okay.
Thank you, Chair. With regard to those, like the Chancery Fund and things like that, is there any possibility that those that are statutorily required to be independent, I forget what the term is you use to explain them, but could we have like a quarterly report on those, or is that possible?
So those are considered fiduciary accounts. They don't
Mhm.
belong to the county. They don't fall under the auspice of the treasurer's office. I think it was just a confusion. There had been a new GASB pronouncement that changed the way we report those.
Yes.
And there's been a lot of staff turnover, especially in ROE. So I think what you're supposed to report is what the confusion was, not that they didn't report, because they did. It just included extra activity.
Okay, and did they report it in a timely manner
Yes,
though?
yes,
Okay, all right,
yes.
okay.
And our auditor's office also reviews that, so they'll have that knowledge going into this year to make sure they communicate with the ROE and the sheriff to make sure that what's included is correct.
Perfect, okay. Thank you very much. Thank you.
Thank you. I think the good news is we caught the discrepancies, which, you know, is a good thing. Julie, did you
Yeah,
have another question? Okay, go
I-
ahead.
Karen, can you tell us what is the sheriff chancery account? What
I-
money, where does the money
It's
come
the
that's in it?
Foreclosure properties. The money from the
Oh.
foreclosures go in there and then they pay things out of there. But
Okay,
the money doesn't belong to the county.
okay, so
necessarily.
this conversation came up in a prior meeting. We talked about this and the money the county, when the county takes the property. So the sheriff removes the individual from their home and we take possession of the home. And this is not just if they default on their mortgage, it's if they also default on property taxes, correct?
That's way beyond my.
I would
my
suggest,
Okay.
I would suggest that if
Let
you
me
have
finish,
questions,
please. So
take-
if we want to talk about this account in depth to understand it,
Could, yeah,
who do we have to bring
I
forward?
would be happy to research it for you. I don't want to,
Okay.
off the top of my head, share what I believe in.
But it's
I don't wanna
someone
be
within the
incorrect.
sheriff's department
It could be The
that,
sheriff's department, it could
Okay.
be the auditor's office, it could be me, whoever you want to direct it to. I'm sure everyone would be happy to answer.
well, I think the
question.
person who, it probably would be in the sheriff's department who,
Well, I'm
whether
not sure
they're-
that's appropriate for finance because it's a procedural question. I mean, we are dealing with the money in the account, but we are not dealing here
Just
with
with
the
the-
process of
yes.
foreclosure. So Julie, I would respectfully suggest that you take this up, individually offline with whomever, you want to get your answers.
So the purpose of my question, my inquiry is because it would be good to know whether or not there's any possibility that first of all, to understand it. As a sitting board member, we should understand
Yes,
these.
we should, but that is not part of this committee, and I would ask
Okay.
that we move on. Thank you.
The chair has it. What can I say?
Thank you. Any other questions? Okay, thank you very much. I
Thank you.
really appreciate your time and coming here. Okay, new business number 2, appropriating grant funds in the county clerk budget from the Illinois State
That's not
Board of
me.
Elections polling place accessibility grant. Motion, can I get a previous roll? Or I should say questions or discussion? Okay, can I get a previous roll?
Previous roll.
Thank you. Can I get a second?
Second for Berkowitz.
All in favor? Opposed? Motion passes. Number 3, abating the taxes. Okay, let me ask this. There's a whole bunch of these
There should be
tax
6.
abatements.
Yeah.
Karen, I don't know why I keep calling you Rashawn. I'm sorry. Karen, let me,
7,
I'll
there's
read the
7.
first one. We'll get a motion and a second on the floor, and then we'll have you explain what these are all about. if
Okay.
that's okay. Okay, number 3, abating the taxes heretofore levied in tax levy year 2025 for the year 2026 to pay debt service of $7,534,987 on the $36,585,000 outstanding principal amount of general obligation transportation improvement bonds. Motion Trinier, second Winfrey. Okay, Karen, please.
Okay, so when the county issues debt, we issue it as general obligation of the county. We also pledge alternative revenue to cover it, but the general obligation is property taxes. This action stops property taxes from being increased to cover these debt payments. We move the money into the debt service funds for these payments. It was done last week. So the money is already sitting there. So when the levy is set in October, these amounts won't be added to the levy.
Questions? So this is a good thing, basically.
It's
We're
good that
saving
we do
the
it every
taxpayers'
year.
money.
It's one time a year. State statute allows us to issue in that manner, but the alternate revenue sources are what we actually use to pay it. Sales tax, RTA tax. I mean, there's a bunch of other things we use, not property taxes. I don't know that everyone has that approach to it, but exactly.
So when we say abatement, we're not actually collecting them and giving the money back. We're basically not collecting them.
Exactly,
Okay.
exactly. So these then go to the clerk's office
Right.
to file.
Okay. Dan, do you have a question?
Yeah, I was just, so we actually spent less than we thought we were gonna spend, is that it?
No, we just are not triggering the debt being added to our property taxes.
Okay.
Is that?
We're
okay with
saying
you?
that we're managing our money well. We've moved it into the debt service fund, so we're prepared to pay the debt service for next year already. So there's no need
Sure,
to add that
question
amount to our
from-
property taxes.
Thank you, Julie.
Karen, so you're making a payment to the debt service. What will the outstanding principal be after that payment?
Oh, I don't know.
Can
It's
you,
currently 36,585,000.
can you include that? Because,
Well, the principal payment has not been made for this year yet. That happens in November, so it'll be lower by that. And then it'll be lower again by this. So I would think it would probably drop by about 10 million between the 2 years, but I don't have that with me.
I mean,
Yeah.
we do have a repayment schedule,
Yes,
correct?
and I can provide a copy of that to the board.
Okay.
I'd like,
Oh, there you
I-
go. It's in your budget book.
okay, so we get it once a year in the budget book. If we could maybe get that information every 6 months.
I don't think we
just-
need to
just-
get it every 6 months.
Okay.
The way the debt service works is we pay interest May 15th. Every single one of these are the same. We pay interest May 15th. We pay principal and interest November 15th for every one of these. There's no other activity in those funds. They're set up just to make debt service
Okay.
payments.
So you're making a payment, you're going to make this payment after the collection of the tax, which is due today, or are you including any property
So
taxes?
we're taking this action removes it from any relationship with property taxes. That's what this is.
I
doing.
understand that,
So
but
the
it is,
payment isn't made till next year. When you set the
Okay.
levy in October, it's the 25 levy that's collected in 26. We're saying we've already taken care of debt service by setting the funds aside in the debt service fund.
while it's sitting there in the debt service
It earns
fund,
interest.
it does earn
Yes, it does.
interest. Okay, thank you.
I mean, this is essentially a legal mechanism, correct?
yes.
In order to account for the funds appropriately.
Yes.
Okay, thank you. Any other questions?
No, and they're all the same.
Yep.
So
Okay, thank you.
they're different amounts in different funds, but The explanation is the same.
So we have a motion and a second. Can I get a previous roll? And a second. Okay, all in favor? Opposed? Motion passes. Number 4, abating the taxes. I'm just going to skip a bunch of the verbiage. To pay debt service of $4,922,200 on the $10,750,000 outstanding principal amount of general obligation refunding bonds. Previous? All in favor? Opposed? Motion passes. We're abating number 5, abating the taxes to pay debt service of $4,398,500 on the $34,720,000 outstanding principal amount of general obligation building will series 2016. All in favor? Aye. Opposed? Motion passes. Number 6, abating the taxes to pay debt service of $2,624,175 on the $50,025,000 outstanding principal amount of general obligation building will bonds, series 2019. Can I get a previous? How about- All in favor? Aye. Opposed? Motion passes. Number 7, abating the taxes to pay debt service of $5,947,127 on the $159,850,000 outstanding principal amount of general obligation refunding bonds, series 2020. Motion. Previous? All in favor? Aye. Opposed? Motion passes. And number 8, abating the taxes heretofore levied in tax levy year 2025 to pay debt service of $4,616,650 on the $33,440,000 outstanding principal amount of general obligation renewable natural gas facility bonds, series 2021. Previous?
roll.
Second?
Second, Berkowitz.
All in favor? Aye. Opposed? Motion passes. Okay, thank you very much. Number 9 is assignment of tax sale certificates. Motion.
Discussion?
Yep, question, Julie?
Yes, I'd like more information on this.
Okay, this
Tax
is something that we do every year.
I'd
And-
like more information on it, just about the tax certificate. Are these two, and this entity here, did they purchase? Okay, Karen, it's not Karen, so I guess it's
Yeah,
on the agenda through Jen. Is Jen here?
we're happy to add it to a few, I
Jen?
mean, this is, I mean, I'm happy to
Is
add this
anybody here that can comment on?
to, I did see Tim come in. I know you don't have
Okay,
much
great.
time,
Tim?
but
can you
if Tim
make
is
a
willing
comment
to
on that
answer a
first?
couple questions, since you're here.
Just for the benefit of our board, could you briefly just explain what a tax sale is and then who, we've got a name here that these certificates are being issued to tax purchasers. So give us a little bit of information, a brief description of the process.
Sure.
Thank you.
Taxes that aren't paid, of course, by the due date, get put on a delinquent list. We then send delinquent notices. If they're not paid by, I think this year's December 2nd, we have the tax sale. So when we sell taxes, somebody else is simply paying those taxes for. So that individual, that entity is called a tax buyer. We usually have 70 or 75 different individuals and entities that'll come to Will and bid on our taxes that haven't been paid. Those that succeed then own a certificate and are due repayment plus certain fees and costs and things as time goes on.
So there's no mention of the price or the price that they paid when they purchased the tax?
So sure, they pay the taxes publicly available on the website as due. So the
Okay.
amount you paid your taxes that are due, if you didn't, the tax buyer would
Mhm.
pay that exact amount
Mhm.
for you. The way they bid is with interest rates. So If they want the parcel, they will bid a very low interest rate. Some bid higher. So if I bid 7%, I'm saying, I'll pay these taxes if you pay me 7%. Dan might go in and bid 3%. Dan wins because he's bid a lower percentage rate. And so he'd be the winning tax buyer and own that certificate.
Okay, so by giving them this by purchasing this tax sale certificate, this company, because this seems to be a company in this
It is.
case, and I'm sure they probably, this is their business, going out and buying houses this way. We have a structure, all of these parcels have a home, typically a home or some type of a business where people have paid equity.
Julie,
Make
this is
fi-
far beyond the scope of the question. We're basically talking about approving the piece of paper that is going to.
Okay,
give
so I'm going
ownership.
to ask this board to have a committee of the whole in the future to discuss tax sale certificates, the process, and to be able to ask questions.
I-
Because in every committee meeting, the chairs of these committee meetings do not allow an open and free conversation. As county board members, we ought to understand the process of county government.
Julie,
We ought to understand how we impact the people who live in this county.
we definitely should. and
Taxpayers, business owners. So I am requesting a committee of the whole
We definitely should understand this
At-
process.
in
You
the
are
very
more
near
free
future.
to discuss personally one-on-one with Tim, and I am
No.
happy to set up. a
I'm not
separate-
discussing this
please allow me.
one-on-one.
I'm happy to
you-
set up.
You
a
interrupted
separate-
me, Sherry.
Yes, I did. I'm happy to set up a separate finance committee, either a separate finance committee meeting where we can discuss this, or we can invite Tim to come to a future finance meeting and present on this. But just remember, this committee is not responsible for setting the process. We are only responsible for the financial end of it. So the process of tax sales has absolutely nothing to do with finance. It's governed by state law. So I'm happy to
May I
set that up
respond to that? May I respond to that?
for a minute, and then we need to move on.
Thank you, thank you. So obviously, no one else had any questions, and I did. And I feel as a county board member that if you have questions, they need to be answered, and we need to understand the process. So thank you for your response, and I would like this put on the calendar in the near future, and please reach out to county board members to make sure that it's a date that will work for us. But I continue to be disappointed that in committee, people get shut down and they don't get to ask questions.
I appreciate you sharing your feelings. Okay, any other questions for Tim while he's up here? Okay, thank you.
Thank you, Madam
Appreciate
Chair.
it, Tim. Okay. Previous? Oh, we had the previous. All in favor? Aye. Opposed? No. Oh, no, I'm sorry. I didn't mean to say no. I am not opposed. Motion passes. Number 11, I'm sorry, number 10, fiscal year 25 budget transfer. Let's get a motion in a second. And then discussion. I know Rashawn wants to fill us in on this. Oh, I thought she was on, sorry. Okay, what am I doing now? The heck? Let's try that. Okay.
Good afternoon. Just wanted to provide an explanation as to the budget transfer that's before you. Part of it, the one for the Sheriff ADF, is kind of related to the item under old business, the use of contingency funds. We had that before you last month. We kept it on the agenda this month just to provide an update. They're no longer requesting the use of contingency funds. They were able to find the funds in their budget. And that's what you have here before you. So this is just routine.
Okay, any questions for Rashawn? Okay, and a second. All in favor? Aye, opposed? Motion passes. Thank you. And that brings us to number 11, the proposed fiscal year 26 budget discussion on the revenue side.
Yep. So
Rashawn,
this
take
is
it
the
away.
first discussion of our proposed FY 26 budget, going over the revenue projections and how those were projected for FY 26. In your packet, you'll have the memo as well as the detailed revenue projection line by line. So overall projections were estimated using a conservative estimate based on historical trends and current levels of collections. We always use at least 2 years actuals as well as current year to date. The corporate fund, which is our operating budget, makes up about 35% of the total budget. The charts and graphs of the revenue sources in the corporate fund are displayed. Can you go to the, instead of the detailed, can you go to the memo? Yep, thank you. The projected revenue is 282.8 million. You'll note that our revenue sources are property taxes, which make up about 40% of the overall revenue. License and permits, intergovernmental revenue at 33%, charges for services 12%, fines and forfeitures, interest, rental income, miscellaneous revenue, and other financing sources, which is basically transfers in and out.
Hold on one sec. Okay, hold on, let me turn you on. Rashawn, would you want to go through this and then have us ask questions or?
Yeah, we can.
Okay, go ahead.
Just the number, the property tax, it says 40%, which I know that's probably right. But when I look at the pie chart, it shows 21%. What am I looking at wrong?
Yeah, that could be a typo.
Oh,
Yeah.
thank you.
I,
was like-
I noticed that too.
Yeah, that could be a typo when it was calculating. Yeah.
So what is the
40%.
40%,
Yes.
okay.
40%. Property taxes is our most largest revenue source for the corporate fund. So
Cause it's weird, even the intergovernmental looks bigger as a piece of the pie.
I think
And
it
it says
was
33%. So
when
yeah,
the-
something's
the-
not quite right there.
pie and chart graph was manipulated. Yeah.
Bad day.
We'll get a
Yes.
corrected version of that,
Yes.
guys, for everybody.
It just looked weird.
So the property taxes includes 2% CPI as well as new property. The estimated assessed value increased 8.3% from the previous year. This resulted into an increase in the corporate fund of 3.9 million. Payment in lieu and delinquent taxes are estimated based on actual receipts, which we're estimating at 4.2 million. Overall revenue is up about 4.5%. License and permits increased 0.5% overall. The increases are projected in marriage and civil union permits, as well as building and zoning permits. Under intergovernmental revenue, this is another major revenue source and represents 33% of the total revenue. It's comprised, of shared revenues such as sales tax and other taxes, such as salary reimbursements and grants. Based on the previous actual and current levels of receipts, sales tax, video gaming, and state income tax are all projected to increase. State use tax decreased significantly due to a change in law effective January 1st of this year by the Illinois Department of Revenue, diverting this tax to the retailer's occupation tax. So when online sales happen in the outside the state of Illinois, businesses are required to pay the retailer's occupation tax, which we're seeing a decrease in the state use tax revenue that we're receiving. However, this change, we're seeing the increase or is being offset in our sales tax and supplemental sales tax revenue.
Rashawn, how did they determine how much of that tax Will County receives for the online sale?
So all of the tax that is paid is, so wherever that, the location, yeah, the purchases happened, that's how they're able to determine that.
Thank you.
Personal property replacement tax decrease and is based on the estimate that we received from Illinois Department of Revenue. Salary and other reimbursements are projected to increase, and this is based on previous actual and current receipts. Federal and state grants reflect awards for FY '26. Overall revenue is up in this category 0.6%. Charges for services accounts for 12% of the total revenue. This category represents fees for services rendered by various county departments. Overall, this category has increased 4.3%. Fines and forfeitures are projected to decline overall. This is due to decreases projected in criminal fines and traffic fines based on previous year's receipts as well as current year actual. Interest, the projection for our interest income was provided directly by the treasurer's office based on the activity that we're seeing currently and previous year's interest collected. Miscellaneous revenue decreased from previous fiscal, and other financing sources, which make up 12% of the total revenue, is primarily interfund transfers related to FICA and IMRF, and these transfers match the expense in the corporate fund. Anticipated new revenue, this is just a placeholder. We always estimate about $1 million in this line to take into account if there's any, after the budget has been adopted, if there's any new revenue that comes in instead of increasing the budget, this line is used to offset that. Funds on hand includes remaining grant dollars for the Meridian program related to substance abuse. Overall, total revenue increased 3.3% or 9.1 million. And you also have the detailed revenue summary in your packet as well. Any
Thank-
questions?
Thank you. Jackie, you have a question?
Yeah, just want to make sure I understand. Overall total revenue increasing 3.3%. But then I see overall revenue up property tax 4.5. So I'm just a little confused on what overall in the whole scheme of revenue are we up?
So 3.3% when you look at bottom line in the detailed report.
That's what I wanted
So-
to make sure I was reading that correctly.
Yes, overall, the FY '26 proposed budget, 282.8 million. Last
Yeah,
year,
I
we
don't
were
have
at
that
two.
sheet open.
Yeah, we
Yes.
were 273.7 million.
Yeah, I got the other sheet open. I can't open two at once, or if I can, I
Yeah,
don't know how.
It's hard to go back. and
At least
forth.
certainly not and look at them. So, yeah, I was looking at your memo and I just wanted to make sure it's the very bottom one. that
Yes.
I should be looking at.
Yes,
Okay, and that would include
that includes,
increases in property tax revenue at 2% CPI plus new
New-
property.
that's correct.
And that projection is what the county executive is projecting, and you're under her department.
Yes.
So you're following those numbers based on her
That's what the
presentation.
budget book is based
Yes,
on.
Yeah.
exactly.
Correct.
Yeah.
And the percentages I gave as increase or decrease is for that specific category.
Very good. Thank you.
Okay. Anyone else have questions? Okay.
Thank you.
Rashawn. Really appreciate it. Okay, moving on. Other new business, we don't have any. Public comment? Public comment? One more time, public comment? Okay, I don't have any announcements or reports. We don't need an executive session, I'm assuming. I will look for a motion to adjourn. Second, Winfrey, all in favor? Aye, we're adjourned. Thank you. Oh, our next meeting is scheduled for October 7th, 2025. Kind of late.
Special.